Hello traders! We're having a look at some of the indicators that are available on the MT4 platform and how you might use them to help improve your trading, or some suggestions and tips that you might keep in mind. Today we're going to be looking at the Commodity Channel Index, or CCI for short as it's known, which actually happens to be one of my favorite indicators. The technical classification is a momentum oscillator, and it's used to help identify price reversals, which I'll show you how to do in a minute. So in order to show you how to do this, we'll start with a chart, which we have here. Any random one will do for the explanation. I personally prefer to use it without the grid, but if you want to use the grid, that's a matter of personal preference. In order to put the CCI onto the chart, you go here to your navigator window, and then under the indicator list, you scroll down to where it says CCI. You just drag and drop it onto the chart. You get this pop-up or dialog box as it's called, and it allows you to change some of the variables, the colors, the levels, but that's usually reserved mostly for more advanced users, so you can just click OK and ignore it for now. And then we'll have down here at the bottom of the chart, we have our CCI indicator. Now, this was originally designed for use in commodities to identify the cyclical moves that are more typical of commodities, hence the name Commodity Channel Index. And so it uses a mathematical formula, actually uses two mathematical formulas based on moving averages to try to determine when the market is overpriced or underpriced. In other words, whether it's overbought or it's oversold. And this is why these lines here, the long dotted lines, which are registered at 100, the 100 level, if the commodity channel index goes above 100, it means most likely, or it's trying to indicate that the market is overbought. And if it goes below 100 on the negative side, that means usually indicates that the market is oversold. And when the market is overbought, typically that means that it's going to start going down, and if it's oversold, that means the market's typically going to start going up, which is basically how you use this indicator. Is you're looking for opportunities when it crosses over the dotted lines. So in this example here, if we look, we'll see here the CCI went above 100, and which would be an indication that this currency pair would start going down, and as we see, that's exactly what happened. And then here we see it goes below 100 significantly, which would be an indication that it would be going up, and it sort of does. Well, there's a bit of a caveat here because this currency pair is trending on the downside, so we're going to have more signals to say that it's going to be going down than we're going to have signals that say it's going to be going up. So whenever we see it pop above 100, well, we can identify as a potential that here it's about to start going down. There is that potential. Now, there is one caveat which is important for using this indicator, is that when it crosses over the 100 level, it can very often go for an extended it can go way above of the 100 or way below minus 100. So when you're looking, what the signal that you're looking for is not just that it goes above 100, but that it not only goes above 100, but then it comes back down. And then when it comes back down, that's usually an indication that the market is overbought. And then, of course, the reverse when the market is oversold. Now, it's easy. Now, since this was designed for commodities, it's easier to see it in a market that's moving flat, which is where it usually performs better. So let me see if I can find one in the 5 minutes mark. Okay, so here we can see the market is more or less going flat. So we'll have more buy and sell indications more likely. So here we have the same scenario. The commodity channel index went above 100 and went significantly above 100, and then it turned around, and then we can see that the market also went down. Here it crossed over the minus 100, went down a little bit, came back, and then you can see that the market trended higher. And so the thing is, as I was mentioning, when what you're looking for is not just that it crosses over, but that it starts moving, that it crosses back. Because here we have an example where it crossed over 100 and then it stayed over 100 for an extended time until it eventually, of course, crossed back, and then that's when the market started going down, which would have been an opportunity to sell the currency. And of course, like any indicator, it's not always perfect. And let me see if there's an example here. Right here, and we have an example of where this commodity, the CCI, went over 100, then came back, indicating that this currency pair would most likely go down. And well, it didn't. It popped back up, and then it continued to trend sideways. So whenever you consider an indicator or any kind of strategy, always be aware of the times when it could give you a false positive, or it can give you a false signal. But however, it's a matter of using judgment and also considering other indications or other indicators or other forms of determining where you expect the market to be going. Anyway, that's it for the CCI for today. Thanks for watching, and have a good one.